Morning, everybody. It's exactly 9 o'clock on this Friday afternoon, end of the week, first Friday of the month. So, payrolls. Okay, so going to keep this short and sweet. Prior to the numbers coming out for payrolls at 8:30, we had Asia and European markets both a bit higher, but we had the Dow only up 25, Nasdaq up 20, and the S&P up $3. What happens between 8 and 8:29? Really little of anything. Dow from up 25 to up 12, Nasdaq about unchanged, and the S&P from up 3 to up 1. The numbers came out. They were, depending upon how you look at them, horrendous. The non-farm payrolls 336,000. Expectation was 165 to 170, and so that number was double what was expected. Doesn't sound like an economy that's slowing down. And by the way, it does also jive in a more accurate manner than any of the other numbers with the earlier JOLTS number that showed such a massive gain in available job openings. Unemployment rate is 3.8%. That's the highest since January of 22. Average hourly earnings, 0.2 plus 0.2, which was unchanged from last month and decent. Year over year is 4.2. And that number is a little bit better than expected, but when you compare it with we want to see 2% inflation, doesn't look so great. Average hourly works unchanged, 34.4 hours. The labor participation rate 62.8, which was unchanged, and the underemployment rate actually came down 0.1%. It was 7 versus 7.1. The market hated it, and the Dow right now is down 214. It was as low as minus 250. The S&P I saw down about 43. It's now down 39. The 10-year is hanging around that 486, which is not overwhelming when you consider that the 30-year, which was just under 5, moved to just over 5, and then in the last 15 minutes moved from 5 to 505 and a half. That's a pretty dramatic move, a 1% move in 25 minutes. Nasdaq is down 170 again. Dow is down 220, and the S&P is down 40. At 3 o'clock, we also have consumer credit, always an issue. And I want to make mention that our biggest position, this is a position that I went outside our rules on because of how it came into effect, and that is our position in Pioneer, PXD. Normally, my positions are somewhere between 5,000 and 7,500 as an initial position. Sometimes I go as high as a 200% position or 10,000. However, we made so much money. We had a $7,700 position in CVX Chevron in our portfolio that I sold at about 170. So we had a pretty big chunk of money there. And rather than break it up, I was looking for something with some income, and we chose Pioneer. We paid $220 for 75 shares of Pioneer, which is $16,500, and that is roughly a 300% position. based on the fact that we were getting 11.85% of interest income, dividend income, as well as Pioneer being an incredibly strong um, operator, and the best and biggest operator in the Permian. Well, ExxonMobil is buying them, which was one of the arguments that Pioneer as a $200 stock looked expensive, but in point of fact, it was not. And it's a relatively small company in that business. Well, it's Exxon's biggest acquisition since they bought Mobil. And they're figuring about 60 billion, which is kind of a disappointment for me. It's only a 10% premium and doesn't even take the stock to a new all-time high. But be that as it may, we'll see how that shakes out. The biggest problem will be how do I replace the income? Okay, as far as futures go, bonds are down heavily, down almost 2.5 points in the 30 year. The 10 year is down over a point, and the 5 year is down about 2/3 of a point, none of which looks particularly good. Um, the Qs are down pretty substantially. Let's see, the dollar is up 60 cents, 57 cents, and that's on the basis of those big moves in interest rates. The grains are giving back a little, very little. And as I showed you last night, I think those look pretty interesting and look like they're trying to bottom. Oil got down to 82.15. Last is 82.50. That's up 19 cents. Heating oil up 9 cents. Gasoline up 2 cents. Nat gas, which had pretty much a historic day yesterday, was up about 8%, is up another 3.5 cents at 320. And on the chart, it really is beginning to look um, impressive. Um, there's a big UNG producer in Australia that was on strike that came off strike and is now back on strike. So that might be hurting supply a little. Clearly, we need to get through this orange line is the 50-week moving average. Let's go to the daily uh, just to give you a little closer in look at what this looks like. We have this great big consolidation, and now we are breaking to the upside. On the daily, all of the moving averages are leveling off and are below price again. So we'll have to see. We did have this big gap up, but that was not a day of trading. That was the roll from the October to the November contract, which had a 30-cent difference to it. But we are looking strong. Anyway, there you go, folks. More news that will be revised before next month, and a market that, as I've mentioned for the last couple of days, has had some dramatically unimpressive, low volume, poor market internals rallies. So beware.